Hello everyone, this is Mithilesh here, and today we have a very special guest, and this is going to be a special podcast that we are going to do on the transfer pricing and corporate tax implications. It's been more than 20 months, on the cusp of reaching 2 years, and we are going to file the first ever corporate tax returns and transfer pricing compliances for all the multinational enterprises and UAE establishments here. And we have with us the man himself. We call him the godfather for taxation in UAE, and he's a godfather really for all of us. So, Mr. Nirav Shah, thank you so much, sir, for accepting this request, first of all. And I know that the renowned name and, fame is there with you on corporate tax. But how do you actually look at the evolution in UAE in terms of the past decade or so, or the last 2 decades, from transfer pricing perspective or corporate tax perspective or M&E taxation perspective, pre-VAT, post-VAT, and now the current regulatory aspects evolving? So you are the best person, I think, to talk about this in UAE. So please. Yeah.
So first of all, thank you, Mithilesh, for having me here. And nobody's a godfather. We all are learning, and it's our journey to that we have come together in this. And look, it has been a very, very interesting journey. So if you ask me about last decade, that's when I started FAME.
Yes, sir.
When I started FAME, there were no taxes, there were no compliances, there was nothing.
Yes, sir.
Right? And you go and set up a boutique tax advisory firm, and people were actually laughing at me.
That's what.
Right?
Yeah.
So things happen and things evolve, and now we have seen in last 7 years there has been introduction of VAT. First came excise, then in the short span came VAT, then within a year there came AML, UBO, ESR, all of that, to ensure that compliances outside of the tax regime are more robust. And then we have, of course, now a corporate tax, which got announced in 22.
Yes, sir.
So if you look at the announcement date, we are already 2 years
2 years past. Yeah.
So while we are now filing the first returns,
Yes, sir.
but they've given us enough time. And that has been the unique part of the UAE, that they've given sufficient time. They've published the law well in advance. They kept on giving you more and more clarification, information, guides. Of course, the plethora of them.
Yes, sir.
So it's not easy. And that's why it prompted me to then compile that in a book, which you are aware, and now we are together going on to another journey, which we'll talk about a bit later. But look, the businesses have evolved, the environment has evolved, and of course the type of businesses that UAE attracted before and now are very different.
Yes, sir. Yeah.
And therefore, it is actually the vision of the UAE government that they wanted to become a more mature market, a leading business and finance hub, and that's the direction that clearly they are taking over.
Yes, sir.
And they are very clear of what they want to achieve, and that's why they're laying all this enabling bricks on the
compiling
everything to put it in. Of course, it's difficult for any businesses to go from a no compliance zone to a full compliance zone.
Yes, sir.
And therefore, everybody needs to rewire and change, which we don't see that everybody is ready with that. There are few who are ahead in the game, and they're preparing, and they're trying to get equipped well in time, but there are few which are still waking up. And therefore, it will always be a mix where we are finishing returns and filing returns for some, and some are still calling, I have not done this.
What should I do?
What should I do now? So let's start from zero. And that's where we are.
Yes,
It's an interesting time, and what we have seen with introduction of VAT also. But VAT did not pinch everybody so much, because it's not a cost, just a compliance. I've put in place some compliance mechanism, and I'm okay. Now here it starts pinching. It's a cost. And this is an added cost in already a high cost country. And therefore, all the more attention that it is getting,
And in terms of, being prepared, thinking about what to do now, or already being overreactive in terms of the clients and in terms of the mixed bag of people in the industry, what kind of strategy you see as the most, renowned or most, followed mechanism in the market? And from a low tax jurisdiction, as you were saying, the gray list kind of situation now comes into 9%, and tomorrow it might move to 15%, and withholding might come into play, individual tax might come into play. So with this, do you see that the mindset is getting prepared or people are getting into that zone, or still there is reluctance?
No, look, one does not have a choice, right?
You have to.
So you have to adapt. The choice that you have is, do you want to live in UAE or not?
Yes.
And the moment you make that choice, the rest of the things comes with it as a package, right? So yes, some are not fully prepared, as I would call them, but it's not left to them as to whether I can do this or I cannot do this. No, you have to do it, right? In this part of the world, unfortunately, compared to maybe other jurisdictions where it's more democratic, the cost of litigation is not that high. Here they work other way around.
Yes, sir.
Because they don't have an entire machinery of tax collection, tax monitoring and all of that. They keep the penalties and the
Audit scrutiny rates.
cost of litigation very high. So that itself acts as a deterrent and makes you follow the right rules
Yes.
and comply. Because you don't want to unnecessarily go through that process, So that's the approach which is adopted here, and therefore I don't think anybody has a choice.
In terms of, sir, from audit not being a mandate, from IFRS being made mandatory now, and from tax audit not being there, and from the return of income that has to be filed in about 60-70 days from now, there is no proper mechanism with which people are trained to do it also. I mean, they're
Not at all.
directly going into this, filing scenario.
So the whole issue is that the government is hell-bent on using technology, because that's the only way that they can make sure that compliance will be implemented, number one. At the same time, the mechanism is not fully there because it's being done for the first time, right? We saw last year the huge issue with the MRR tax portal. Last December, they had to extend the deadline for filing, all because of that, because they were not fully prepared, right?
Yeah.
But then they made sure that all that gets corrected, gets put in place, and everything is there. And they'll keep improving this as they learn about their own mistakes, right?
Yes, sir.
But that means that even the businesses will need to change and adapt. We have seen financials where, though it is signed by a leading audit firm, calling themselves to be IFRS compliant, were not even following the revenue recognition. Forget any other disclosure from an IFRS point of view, right?
Yeah.
And unfortunately, still some of the audit professionals are not waking up.
Yeah.
And they're still just busy in their own world. I need to finish the audit. But the financial has tax impact,
Yeah.
transfer pricing impact. Have you done proper disclosure? No. And still we are getting some reports like that, and we're asking them to change. Oh, why should we change? So those things will have to change.
And there are...
And that's where the CFO, the business owners and all that will have to also start insisting all this. Because it's a collective responsibility. It's not going to be done by at one end. The entire professionals have to change. The business owners have to change. The environment that anything was being done was accepted is no longer there. So you are not in times when whatever financial you prepared was only for bank purposes and nobody else looked at it. So as long as the bank compliance was fine with it, you were fine with it, right?
Yes, sir.
Now we are not in that time. And therefore one has to change and adapt. There's no other option. But of course, we are very slow with that. And maybe some people will fumble, get penalized. And all of that will happen.
And have you seen circumstances that the auditor starts saying that I have not reported it previously and I will not report it now also? In terms of let it be corporate tax, let it be whatever issues that are there, because they are not ready to accept the fact that they made a mistake in the previous years or whatever, and materiality is an issue or whatever are the reasons.
There are various reasons. It's not just one. Some of the auditors do not just want to learn and adapt.
Yes, sir.
And therefore they just want to follow what they were used to doing. That's number one. Number two is hesitation to accept that something that was done was not correct entirely. Third, to even accept that I as an auditor has signed off on something which was not even IFRS compliant.
That is concerned.
So these are all things which are all playing at a different level. If one gets more mature about it and say, okay, now onwards the tax compliances are there, let me put the right thing going forward at least. And maybe do the correct disclosure for the past mistakes and get over with it. So at the end of the day, audit mistakes, all you need is a disclosure.
Yes, sir. Yes, sir. Yes, sir.
So you do a correct disclosure, make it in line with what is required, and move forward. And if you have a change impact, make that estimate. And that's about it.
The audit teams, if they take the opinion of the tax auditors or the tax consultants and the transfer pricing consultants before finalizing the disclosures or the financial statements, I think 80 to 90% of the problems will get solved in terms of the opening balances, fair market value estimates, or related party, or your allowances, disallowances, nomenclatures, in terms of whatever, in terms of tax planning efficiencies also. Why is that not happening?
It's not why, it's just a matter of time.
Yeah.
Today, you are under a pressure to complete your audit within a certain timeline. And therefore, you just don't want to think too many things and change the approach.
Yes, sir.
Right?
Yes, sir.
So, you're just I have 50 audits to finish before the month end. So what do? I will only see what is relevant and I'll finish it.
Print it and give.
Right. So I mean things like that. I won't say, so there are a lot of auditors which are today also debating with the client that why you adopted this tax position, and they also get their own tax team to look at that and adopt or confirm. And there are, at the other end, there are people who say, okay, get us a tax opinion, and we put it in the file and we sign. So there are all the extremes. Yeah. And there is third one which is the worst, which does not ask for anything and signs the balance sheet and gives. These are three different segments which we have now. But I think with time this will get corrected and narrow down to more acceptable, fairer approach to the whole thing.
We've spoken about auditors, sir. Now coming to the entrepreneurs, coming to the business communities, coming to people who are actually doing business here for the last 2-3 decades. There was a lot of reluctance in terms of last 6 months. What are you talking about and why should I do this? And now in the last 1.5 months, you're seeing that ye to karna hi padega. You have to go ahead and you have to do it. So now I think the temperature is slowly rising. And now with this particular, transition kind of scenario, most of them, they keep telling even now that should I pay this tax or can I still go back? There is no option. They're not understanding that fact. Second thing is on the qualifying free zone part, the most debated and the most discussed part. So entrepreneurs, from the moment from 0 to 9, their reactions and how the mindsets are right now, what should they do as per you, and about the qualifying free zone. Your comments.
So look, when you are running a business for so many years and you're not used to paying taxes, okay, it does pinch, and it will pinch when your volumes are high and the numbers are sizable. It is going to pinch, right? And therefore you will try to see what is the best possible option for me, which you have right to do. All that we are trying to say is that wake up in time, accept the reality and see the framework and work within that framework and find your options. There are still many options which are there, right? One of the lowest tax rate in the world, still giving you an option of 0% tax also on certain types of income and activities and all of that.
They all know this, sir.
Okay. Now, it's just that you did not had to pay anything and now you have to pay something.
Yeah.
Is the change, in which one needs to accept, right? Yes, there is reluctance. From 1 year back when we were meeting the owners, find a way, I don't want to pay tax.
That was the reaction initially.
That was the one simple line,
Yes.
Then we say, no, there's no other way. This is what it is. This is what we have to do. And this is why. No, still look at something. Give me some options. Give me this. Okay, now it is a time when they are saying, okay, tell us what needs to be done and let's finish it.
And within their communities also, these discussions are happening that, this is the effective tax rate and I paid only this much for this turnover and this is how the planning was done. And they're not really getting into the details of how it is being planned or how the computation has aroused for each and everyone. The facts are different.
Yeah.
So when will the tax teams and audit teams come up to the speed? And, the entrepreneurs are also on the cusp of transition. This is the exact time that everybody has to put in their
what you are saying is still going to come after 2 months.
So
once you file from now and September end, when you filed and paid the tax,
yes, sir.
That's when they'll start coming and say, I only paid effective so much and this and that.
Yes, sir.
Okay, today still we are in a time when they are getting ready. They want to get it done and get it done correctly. And again, there are 3 types. One who has prepared well and they are sleeping silently, that no, I am taken care of. One who did not prepare well and he knows that there is a cost but I'll work around going forward in this manner. And third is just waking up and saying, oh, but I didn't want to pay, but now I don't have a choice.
Yes, sir.
So these are the three different types.
You told it as if you're preparing for the exam one day before, or
Yeah, it's just exactly of that sort.
Perfect, sir. So from international perspective, sir. So we've spoken about auditors, we've spoken about business people. There are also multinational enterprises. Quite a bit is about the global exposure. So this multinational enterprises coming to UAE with the effective tax rate expectations, or with any kind of intangibles being deployed here, or ease of life, or individual tax not being there are multiple reasons. But from the aspect of corporate tax being introduced into their ecosystem, do you see that they are already prepared for this, and they are going to take this up?
Well, look, we cannot vouch that everybody is ready. But of course, multinationals is a lot which understands this much better than the other businesses.
Yes.
Number one. Number two, they have experienced the taxes and compliances in other parts of the world, other countries. And look, a lot of multinationals have the regional headquarters here. So their team is managing the taxes in other countries also from here. So they have dedicated tax people even before the taxes came in. Right?
Yes.
So that entire community is very well aware. They very well know what is coming. And in fact, they were the one, I would say, that has prepared much better as compared to a lot of others, and made their organization ready for this compliances in a better manner. Are they fully ready? May not be. They are also still going through the last minute issues and all of that. But they are better prepared as compared to small or medium businesses, or homegrown large businesses, or local family businesses and things like that. So yes, they are better off.
Among these MNEs, sir, if they have specifically planned for the purpose of zero tax, or they have come up with a intention to maybe come to UAE for betterment of their effective tax rates in the past. Right now, in the first year of this corporate tax, the structuring aspect and also the documentation, the substance, poem, all these aspects
are very important. Now, two sides to it. Some of the MNEs came not only for zero tax. They had tangible businesses in the region. In the region, UAE was the most accommodative place to live in.
Yes.
And therefore, they operated out of here. And that is not changed, right?
That might be 60%, 60-70%.
60-70% of them are off for that reason.
Yes.
And therefore that has not changed. And for them, this 9% does not pinch anyway.
It's the most accommodative still as on date.
They are very, very happy, and they are not worried about that. But in fact, they are preparing for the 15%. As most of them will fall in that category rather than other way around. And therefore, a lot of them did not even change the structure. He's saying, why do I plan for 9 when I have to anyway pay 15?
So that 0 to 9 to 15 is not, it's already there in their minds.
It's already there in their mind. Second type of MNEs now we are seeing a lot is someone who was shying away from UAE because it was a tax haven. Now it is no longer a tax haven, and I can actually use 9% to effectively reduce my overall group tax, and they are coming here. And therefore, I would say people running away from UAE are far less than people now wanting to come to UAE because now it is a compliant regime.
Yeah. So, coming back to the international structuring aspect, sir, there were quite a lot of structures which had the UBOs sitting out of Cyprus or BV and other places, or they were having the hold cost there. Now, the POEM aspect or the effective management aspect, in terms of if the shareholders or the directors or the decision makers are based out of that place and the operations are happening in UAE, how do you actually look at it right now? Because on the verge of getting the corporate tax.
So I'll tell you this way, the last 1.5 years, we have spent a lot of time on restructuring. Okay? Because now the taxes are there, now place of effective management concept is here. And third most important factor is that earlier UAE owners and all kept those holding companies outside to take advantage of the common law jurisdiction outside, which was not available here. Now with DIF CADGM maturing, offering you all the options on common law governance and application, do you really need those entities outside? And this we have been discussing with a lot of families for last 3-4 years.
Yes.
But tax became the trigger. Then now if you don't do it, you'll anyway pay tax on those income here because your POEM is here.
Exactly, sir. Exactly.
Right?
Yeah.
And therefore you might as well relook at those things. So I would say that over last 1.5 years, we have spent more than half of the time in this discussion on restructuring And second bit is also the local businesses, which just went on and set up companies as if it's nobody's business. They never had a thought about it. And ownership patterns all over the place. No commonality, no nothing. Now you want to do grouping, how do you do it? You can't do it. So all of that came into question.
Yes.
And those who actually started thinking rearranged a lot of this thing. But I would still say that in the market, that lot is still only 20-25%.
Yes, sir.
The large 75% is still not thought about rearranging and
Coming back
making
to
it
you.
more efficient overall. They'll still wake up and go through it in the next year or two. You know, that's what I believe.
Do you think they will give any kind of discounting for the first 2-3 years or for settling all this down?
There's never a discounting here.
I
It's
mean,
just that the authorities might just go a little slow on picking up and starting the audit.
yes, sir.
But once it picks up steams, and then it starts from all the day one.
Yes, sir.
And we have seen that, VAT came in 2018.
Yes, sir.
No audit started before mid of 2019.
Yeah.
So for 1.5 years, there was nothing, right? But at that time, FTA was just set up. They were still recruiting. They were still in that process. Now, they are much more ready. They have audit experience. They have tools. They have technology. And they are going specifically after certain things and not generally. Because they also want their efforts to be
They are concentrated on
two results. So they are looking at it that. So I don't see that you will have that kind of a luxury of time that you had when
In
VAT
that.
was introduced. So you'll not have that.
So from the audit closure standpoint and also from CT return filing aspect standpoint right now, sir, what are the important things that the enterprises or the business owners have to focus on in your perspective? Because most of them are closing the audits now. And what are the important things that they have to look at?
Look, first and foremost is assess your tax position before you're closing or finalizing your books. Make suitable adjustments, accommodating all that. Get all your tax compliances in place, transfer pricing, tax opinion, computation, the basis of computation.
Yes, yes.
And all of that needs to be ready now before you close your audit, not after.
That's what is the...
So a lot of people are still coming with signed by, we have done the audit. I said, but who looked at the tax? And nobody, So that's where we stand.
Yes, sir.
But now you've asked me enough questions. Let me start asking you a few.
Please, sir, please.
In your experience
Sure.
of coming to UAE
Sir.
and coming from a matured market like India,
Yes, sir.
this is a la-la land, right?
They are much more smarter people than...
But all I'm saying is,
Yes, sir.
there are no compliances when you came in.
Yes.
The awareness was very, very low. One is how did you went about doing it, but also focus more on what from a business point of view is the right way of choosing an approach for the transfer pricing as a compliance.
For me, I think when I came here, the law was just introduced, or it was about to come when we were doing the trainer programs here, and me and my entire Praneeth, Rishabh, everybody were running around. But when we were talking to the auditors itself, we felt that the laid back attitude is there, and we felt that, when it comes, we will look at it. Not now. And when it was announced as a TP guide, when it was announced as a much more comprehensive document, I was really surprised. I felt that this level of guidance, this level of illustrative, guidance on a concept, each by each concept, they have never given it in India also, to be honest with you.
Yeah.
So yes, Big Fours are there behind this, and FTA is also well prepared for the background and everything. But when we started speaking to the clients, when we were approaching the consulting firms, and we were meeting a lot of people, there is always a element of question mark that is this required still, even now. So when you have to prove that a compliance is there, when a documentation is required, and when it gets tougher to convince people, I felt a bit I took back my the entire enthusiasm was getting killed. But off late, sir, there are at least 20 to 30% consultants in the market who are well aware of what exactly we are talking about. When we spoke to them for the first 1-2 times itself, there was a spark. They took that and they really implemented. Now, when you were saying about the 3 categories of people, the first set of category were the first ones to take that up, and they said, yes, this is what I'm searching for. Please come and please start implementing. So yes, it was tough landing here and doing all these things, but with guidance like yours and people, the blessing. It was always easier to start with, and people, once the fire lights up, once the knowledge gets transmitted, once documentation, they see the quality, they have come up. The most important difference that I see between India and UAE is that India is almost 20 years, and it has saturated market on transfer pricing aspect is concerned. Litigation is just settling. So coming from that to this particular jurisdiction really gave an advantage, saying that, I'm able to see like a time machine that what will happen tomorrow. Even though somebody is laughing at us today that, this is what you are required to do, and he says, I won't do. What is the exact thing, kya ho jayega? That's the attitude that they have. So I know exactly that what is going to happen tomorrow.
See, that's where I just want to point out few things that, and what I see is that when India took 20 years
Yes, sir.
in that process of maturing with use of technology, this country may not take that long.
Yes, sir. Yes, sir.
That's number one. Number two is that even today, like you said, that when they are releasing the law itself, they are very focused.
It's clear.
They are very clear that there are few things like they don't want to introduce safe harbor right now.
Yeah.
Purposely, because they want to get everybody into it, and then start giving maybe a year or two down the line, okay, this is what we accept, don't worry about it, So that's the approach, which is already a matured approach.
Yes, sir.
In a way.
Yes.
Okay. Secondly, when you see the level of detail, like you said, they have picked up from the best practices of everywhere, and they know what they are doing. When VAT came in, they didn't know what they were doing.
Exactly, sir. Yeah.
Now they have matured as a tax authority, and they are using that knowledge to make sure that this gets implemented correctly.
Yeah.
In a way. And therefore all the support and guidance is there. But that's why I still think that there will not be tolerance on non-compliance like we had luxury earlier,
Yeah.
But in your experience now that you started and what we are seeing now, what are the misconceptions? Do you see this?
Some misconceptions.
Not 100. I need a few.
But I'll tell you the top 4 or 5. When you talk about a related party transaction, when you say that it is having the applicability, at least disclosure requirement versus the compliance, benchmarking versus the local file, even that is not understood by even as on today also. And when you talk about benchmarking, they say it's already at arm's length, not required. Next question. That's how they kind of stop you. So benchmarking in terms of the cost aspect also, people are sticking around 22 data, 23 data, search processes here and there. It's a havoc in the market. So there are people who are doing it at $500, $300 also. And there are people who are doing it at $5,000 also. When I go and say, I do it at so-and-so, $2,000, $3,000, they say that I'm getting it at 10% of the cost. Why I should get it done with you? So that's the negotiation drag down that it starts with.
So let's understand this other way around.
Yes, sir.
Are you seeing that people are seeing this more as a compliance only requirement, or is there anything else to it?
See, they are looking at it as a cost at the moment. They are not understanding that if this is planned well, you can actually do the operational transfer pricing, and you can make sure that it can ease your life much more better for the next 10 years or 5 years till it is made 15 or whatever. So the planning compliance, the planning part and the compliance part are not being looked at at all. Yeah, they are not looking
So I
at
think the biggest misconception around transfer pricing is that today we are seeing it as a compliance only.
Yeah.
Transfer pricing traditionally has been used by multinational
for planning
to
purposes.
plan their entire affairs in a manner that they justify why they transferred the margin to a country where they were not paying taxes.
Yes, sir.
And that was the tool that was being used for that purpose. And even UAE now has that tool available.
Yes, sir.
But how many people know this as a tool?
Yeah.
That's the problem. And that's why we are only seeing people rushing to put together a report with their need to file the return.
That's it. They're just looking at it like a piece of paper that, take this as a TP report and file. That's it.
So
and
that's why the entire thing of costing, quality appreciation is not there. Why certain thing is being done is not there. Is that exactly the reason?
So another important thing that I wanted to say is on the functional analysis. So they don't even know what is far and the entire heart of the TP documentation. So it's a price setting. What margin? How are they justifying is the aspect that benchmarking is not at all a price setting. It's not a evidence that you have to prove. It's through your operations that you have to actually justify that how
Why
I
this
and
price?
my price is at this level. And if you are in losses, if you are in capacity utilization issues, if you are in QFZP versus mainland, how actually you need to justify. They've given you all the facilities, all the options also to justify each and every aspect. But the major major challenge with UAE is, sir, that availability of the comparable data. In terms of 24 coming into picture, I mean, we are doing compliance for 24, let's say. The transactions happening in the tax period should actually be compared with the relevant financial year. And 24 data is not available right now. Even now, very few. 10-20% is what is available for the 24 year. So most of them, they're sticking around 22, 23, 21 as the 3-year multiple year data, and they're rushing it out. But the proof that you have run the search today as on the date of return filing or the audit closures has to be part of your TP documentation.
Which nobody is doing.
Nobody's doing. And that's the saddest part of today's reality is.
So look, also part of the problem is that we have to blame on some of the professionals who are not. No, look, it's not the question of what is right is right.
Yes.
Okay. Some of the professionals are only looking at it as an opportunity for them to charge some fees.
Yes.
And they may be offering certain shortcuts.
Yes, sir.
Which either they fully don't know that this is harming the customer
Yes,
or
sir.
client, or they are doing it consciously. It could be both, you know. But look, at the end of the day, the onus is on the business. And that's where now selection of the right partner comes in.
Yes, sir.
That whom do you trust for your compliances?
Till audit.
And they should be willing to stand with you for that audit process, you know.
Yes, yes.
And not just give you a report and run away.
Exactly, sir.
Now, this is where the difference is.
Yes, sir.
And how do you select that kind of a partner? For that, you have to be aware.
Yes, yes, yes.
And this is where I think the biggest issue is that clients are still not fully educated enough of what is the depth of this compliance required.
Right methodology to be used.
Right methodology to be used, why it is to be used, and who has to do it, and why this is acceptable and why this is not acceptable.
Exactly, sir.
So, all the more reason for us as professionals is to spread the right message. And this is where the biggest issue today is coming up.
Yes, sir.
You know, then client will think that, okay, I have done everything. I had all my report. I have filed everything. When the audit comes, the FTA will come and say, okay, but this is not even acceptable. This is not the database we accept. This is not the manner in which we accept. And then if it is a block audit for 5 years and altogether,
So
see
6.
the loss that they will face.
Interest penalty and the 5 years
penalty and
multiplication.
everything together.
Yeah.
So that's what I'm more worried about.
Yes, sir.
That it is something that the business owners are not fully aware.
Yeah.
And some of these professionals are taking advantage in the guise of giving them a cheaper option.
Yeah.
I'm all for reducing the cost. I'm not saying that one should charge $10,000, $15,000 for it. No, charge what is the
right
database excess cost is.
Yes.
But at the same time, don't compromise on the
Quality.
underlying quality.
There's a detailed process that is there in the TP guide, sir, on how the benchmarking has to be done, how many years you
So
have
can
to
you
see.
walk us through that a little bit?
So the entire...
And the reference. Why it
sure.
is necessary is that we are going to follow OECD as a reference.
Yes.
What is the set process which OECD has prescribed?
Sure.
Is there in the TP guide also?
It's there.
Right?
Yeah.
So that's what I want to highlight.
See, from the identification of the transaction, identification of the related party, there are set parameters in terms of management, control, capital, in terms of the 50%, ownership, direct, indirect, and connected person, owner, manager, director, KMP. So related party and connected person identification is the key. They have also put a tab on the opening balances as on 31st, December 23 and 1st January 24. The transition has to be at arm's length. So we start with the opening balances. We identify the related party. We identify the connected person. The terms of these transactions and the way in which these transactions have been done with the other related parties or the group entities or wherever they have done it cross-border or within UAE, these terms and quantification and the remuneration methodologies of these transactions. If this basic part is analyzed by the audit teams or the tax teams or the business owners themselves, I think 80 to 90% of the job is over, sir.
And that's what is part of the benchmarking process.
Analysis. So these are all the basic inputs that I have to actually give to search for internal comparables or open market comparables. Now, they are only worried about the rest of the 20%, 30% job, that I will take all this data and I will go into the benchmarking databases and search for the data. Somehow the misconception is that there is no data available for UAE. There is data available for UAE. There are databases that are giving. And for you, the biggest, happiness that we got is that they have very clearly said if data is not available in UAE, you expand to Africa, Europe, UK, wherever the extension is. And that is a major advantage that the government has made it very clear. This data, when you are searching, you have to search for 3 years, the relevant year and the past 2 years. And you have to make an arm's length range and whether your price is falling within the arm's length range or not. This is the entire process, the basics, functional analysis, economic analysis, and the entire documentation that we have to do. The biggest, misconception is that not doing far, not understanding the transaction, just going by a basic overview kind of a thing, that service, manufacturing, trading, commissioner model, or this overview kind of a thing, and applying the margins left, right, and center as a cut, copy, paste. This is the major disadvantage that it is lying to. When you have such clarity and such details, it's a 120 odd page document, so the entire transfer pricing guide. So the relevant references from OECD with para numbers, page numbers, we have given so many articles, we have done so many things together. And if those particular references are even looked at as do's and don'ts, and if you can, it's just 120 pages. So OECD references have been used. So there is nothing as a alien law that they have brought in.
So there are international precedent.
And they have picked the best possible language. They have picked the best possible explanatory illustrations. And once you test your price, whether it is at arm's length or not, internally, externally, or within the databases, the conclusions have to be taken, and you have to see whether you have to do any voluntary TP adjustment or you are fine. The other thing that as a conclusion that most of them are getting confused is, in a qualifying free zone, if your margin is more than the arm's length range, then there is a problem. That thing is not being understood by most of them. I'm more than the arm's length. What is your problem? That's the kind of reaction. For qualifying free zone, you have to be within the arm's or less than the arm's length. It's fine. For a regular tax paying entity, you have to be within or more. There is a lot of difference.
Yeah.
So these misconceptions, the technical clarity, and the way they build the documentation, for doing all these aspects, the supplementary documentation is the most important thing.
Yeah.
They don't have intercompany agreements. The ledgers are not scrutinized. Gross versus net level netting off is not being done. They are not bothered about the unit level data or the pricing.
This is where I would say that accounting discipline is not there.
So, in terms of each and every aspect, if you go a bit detailed, right from the invoicing level to the consolidation level at the head level or GL level accounting, 80 to 90% of the job is over, sir. But the point is, they are stuck with that cost element, most of them. They are not even considering this 80-90% job, and most of it is around that costing, and in the market has become like that. Yeah. But there are very few people who say that this is required and let's go ahead with this. That kind of realization is what will make it much more better.
I think the maturity will come over a period.
Yes, sir.
But it's something that we need to stress more and more, that when the audit happens here, they will use technology. They'll pick up the comparable very easily.
Yes.
And they are going to come back to you specifically with exact query for you to justify.
Yes, sir.
They are not going to beat around the bush to give you a space to justify anything and everything.
Yes.
So unless you are better prepared, you will have tough time during the audits.
Yes.
Is what I sense.
Absolutely.
And there's a huge misconception on connected person payments.
That's the most important and favorite topic of everybody's.
Throw some lights on.
See, on the connected person aspect, the most difficult part is you comparing a payment of a connected person in a business X versus business Y, even though they're of the same industry. We all know why they have kept this check and individual taxation not being there. You claim an expense and you take it out in your individual thing. The owner, manager, director, or the decision maker, this categorization itself is a major thing, sir, first of all. And I've seen M&Es and also people who are, much larger here, the reluctance of not able to give the data also. They say that this is confidential, this is not to be given. When they come, we will see. That's the kind of language. But the point is, if the profiling is done and if they are absolute professionals and they are working on par with any other employee and taking on par remuneration, then there is no problem. So these are the category A. Let's put our conversation to the category.
There are very few like that.
Very few like that, 10%. But there are always the second category of people who say that, yes, it may be applicable, but I'm working. They're really working and they have not taken it till now, looking at the business or family, or they've done job, but they have not taken. If they want to take it now, the aspect of tax planning, pre-tax and post-tax is a worry. And the aspect of all the facilities, all the payments to be justified right now in terms of emoluments, facilities, any payment they say. So the connected person part, if your profiling is proper, if you have actually done the service, if you are doing the pre-tax, post-tax evaluations, and you are doing the best possible percentage of plucking out, and you are offering a good, effective profit in that particular business or the industry, I don't think you have to be worried.
It's not the question of worrying.
Sir.
The main issue is that two things. Generally, in most of the TP laws internationally,
there's no connected
person concept, right? So you have very little international reference.
Yes, sir.
That's number one.
Yes, sir.
Number two, when we come to connected person, I'm saying, okay, if I'm working, should I compare with an independent HR database or should I compare with the margin?
Very good question, sir. So from most of the market, 80 to 90% of the market, they are going with some HR indicative numbers or the percentages or the package kind of details. But if you ask a owner on how much he has to withdraw from his own business, there is no limit. And it will pinch him when you say that you have to take this much out. So the benchmarking aspect, you cannot quantify and say that is an open market indicative and this is what I am taking. This is for people who are within those ranges, for people who can compare. But let us assume someone who is taking 60 to 70% of their profits out because he's the guy who is the proprietor or the partner or the family business. So for them, if they are even taking out 60-70% of the profit, if the net effective profit that they are disclosing at an entity level is 10% or 15%, let's assume after they plucking out. If you are running a search at the entity level, the business line level of the exact business from which he is plucking out, and if you run a TNMM or a search process of the industry, then you are not only being safe from the connected person, but also you are being saved from the other side in terms of the effective tax of the business that is getting disclosed at a net level profit.
So therefore, what you are saying is that one needs to adopt both the
methodologies.
So you have to do a TNMM to do a margin analysis of what is left in the business after charging that.
Yes.
And is it comparable with similar businesses or not?
Yes, that's primary.
And you support that further with maybe an HR and other comparison.
And your benefit test analysis. Have you really done the service? There is another tax planning mechanism going on that, I'm not supposed to take maybe this much percentage. I'll give it to my wife. I'll give it to my kids. And it goes on.
But all that comes within the connected
person. So either you or your family members or the related parties connected person. So there is a long web that is there. So everything put together as a connected person, percentage is what they will discuss tomorrow. And whether if this trend is there, the planned aspect only for this year, or it has been a regular aspect in the past years also, they're going to check. So the profiling, TNMM analysis, benefit test documentation.
And therefore, a lot of people who are trying to use an easily available HR database.
There is no cost for that.
From other country or from UAE also is not going to be sufficient.
Sir, I've seen somebody using the magazine of a HR portal or something, and they just put it in an email and said, I'm on par, benchmarking is done, so don't do it. Not required.
These are the shortcut that people are taking, which is going to cost them a lot maybe if the audit comes
for loan transaction also, I am at Euribor plus 200, I'm FD rate, that's it, over. So, see, there are shortcuts now that we can take and we can get away and you can keep arguing all night. But if your effective documentation and the expectation of the TP guide and then the rules and the experience is taken into consideration, and if you have a full-fledged documentation, audit proof, fool proof, then you can sleep peacefully, and that's the compliance that is expected to be done. So
but I don't think even 20% is doing that.
I would say 10-15%, sir. Not 20 also.
Yeah.
Yeah.
So we have a lot of scope to go there. Let's look at it positively, right?
Let's look at it positively, sir.
But
Sir.
what do you talk of when you talk of full TP cycle? What do you talk about?
See, from overall life cycle span is concerned, now I think we are in a process of benchmarking and closing right now. But if you see the identification of related party and connected person and benchmarking aspect of those transactions is to be done, it should have been done during the initial periods of 24 or later parts of 24.
Yeah.
We are at 25 and we are filing.
Still doing.
So it's a web of benchmarking, planning goes together. They are at the first phase. Now the documentation part, the intercompany or the service level agreements which are there have to have the backup of the benchmarking. Now there is neither the documentation nor the benchmarking here in most of the situations. Now coming to the third aspect is the compliance, which we are going to do. Audit closures require transfer pricing compliance or require the transfer pricing auditor to come, give them the compliance certificate that everything is good, please go ahead, these are the evidences, this is what I have done. This is the stage at which we are. So if you have done benchmarking, if you have already given the documentation, and if you are going for audit closures now, you are very good. But if you are not doing any of this, and if you are finally coming for the compliance right now, then it might be a post-mortem effort, but still we are struggling and doing something and creating all of this. But believe me, sir, the last leg of the transfer pricing is the litigation. And I'm seeing that coming in the next 2-3 years. And if any of these phases of life cycle is not planned properly, or if it is not done properly, then all of us are going to meet there in the last leg.
And we must highlight the fact that internationally, TP litigation is the highest revenue earner for the tax authorities.
Yes.
I would say 60 to 70% of the litigation are around TP.
Yes.
Okay. And therefore, one cannot discount this any longer going forward.
Yes.
Is what I would kind of stress on.
Yes. Yes. And in the next 24 months, or maybe in the next 15-20 months, they're going to come up with safe harbor and
That's what
these
I'm
concepts
saying.
also.
So, like
they're
I
just
said,
collecting data for the time
they're
being.
just collecting the data. They're being very, very mature.
Yes.
They'll let a 6 month, 1 year pass.
Yes, sir.
And then they'll come up with those things.
Yes.
That this is what we accept, this is what we don't. And whosoever is not there are all get ready
They'll
for
just
the
say
adjustment.
that, accept this and I'll collect.
Huh.
That's how.
Get ready for the adjustment.
Exactly.
It's as simple as that,
So
that's what it will come to.
आपको मेरे को सब कुछ समझ में आ रहा है.
But that's the whole point of we doing this, that
Yeah,
we will circulate, we'll try and educate people that this is what one needs to look at.
Yes, yes.
And this is how one needs to look at.
Yes, yes.
Don't look at this only as a compliance tool.
Yeah.
Try and use this more sophisticatedly, plan your affairs better, and therefore based on that justify your
Yes.
margins and taxes.
Yes.
Yeah.
Yeah.
So that's what I would urge people to look at it that way.
Yes, sir. Both of you said transfer pricing. Let's get to your family foundation and the advisory aspect on what exactly are we looking at the succession planning in terms of the overall aspect of pass-through entities that are being. I see a lot of HNIs, the business owners and people who are just about to hand over the baton to the second generation or third generation coming to you and asking about this family foundation. And yeah, please.
It's a very interesting topic.
Yes, sir.
We have been discussing this for last, I would say, 5 years, since the time DIFC ADGM came up with the entire structure. It's about 6 years now. The immediate response was very slow. But then the UAE government also pushes the local family to go down that route and do the succession planning. So that push was also there. They in fact went and set up family advisory or family wealth center within DIFC and all that. And they are encouraging everybody to take proper professional advice, So great concept, but the pickup has come only because of tax. Under the corporate tax law, if you are a family foundation, you are treated similar to an unincorporated partnership. And therefore, if the beneficiaries are individuals, then they will treat this income as if it is earned by the individual. And from the current corporate tax provision, if individual earns real estate income, investment income, those are not taxed. And therefore, any of those income earned at the foundation level will not be taxed. Further benefit that they are giving is that if you already planned with foundation and you are going to plan now, even if there is a layer below the foundation of a holdco, which is not into any active business, but just earning this investment or real estate income, then that can also apply for the same pass-through status. Now, legally, yes, that is clarified. But there are challenges. And things are not
As easy.
as easy or as hunky-dory or as clear as we think it to be. First thing is foundation is a corporate person. It has a separate legal identity. So by default, it is a taxable person. You want to get pass-through status? Apply. That's the first hurdle, I would call.
Yeah.
So we would have made now 40-50 applications over past 6 months. Till now they were not even looking at it. Now they started looking at it, each one in detail. So first thing they came up with is that, okay, you've made application, very good. Give us your financial statement. Now how many foundations had prepared the financial statement, first of all? Very few. We got them to do it. We submitted. Then they went to the next level. What is the nature of the income you are booking?
They already started issuing.
Is it indeed the investment and the rental only, or is there something else?
So there is audit
These
happening.
are the questions which are being asked now before accepting your application to give you an exemption.
Yeah. Yes,
Right?
Yes.
So it's not going to be a cakewalk. Third and most important thing is that treating a family foundation equivalent to an unincorporated partnership is a flaw.
Yes.
In any mature tax law, you have a separate mechanism to tax a trust or a foundation.
Society, whatever. Yeah.
Or a society.
Yeah.
And given them a separate status under those statute.
Yes.
When you compare with unincorporated partnership, you are assuming that income has passed through in the current year. Whereas the function of the foundation is to accumulate the income.
Yes, sir.
And not distribute for various reasons: succession planning, pooling of the assets, protecting it from the creditors, and all of that.
Yeah.
Right? Yeah. Now, if you're trying to give this kind of a tax treatment, what happens to accumulation?
Exactly.
When I distribute to the beneficiaries, do I have a clarity? Is that distribution of capital or distribution of that accumulated income?
Yeah.
Will this be taxed in the hands of the recipient, or will this be exempt? These questions are not clear.
Okay. But how
Of course, we have made representation, and hopefully, so I'll tell you this way, that when the foundation law came,
Yes, sir.
we made representation, a detailed representation. We asked through DIFC and others that they should allow this step-down structures to get the same treatment, because then only people will prefer.
Secondly or thirdly year. Yeah.
Otherwise, how will you? I mean,
Yeah.
it will negate the whole planning.
Yes.
So they heard that. They brought that into the embed. Right? So now this last bit of future
Distribution
accumulation
is
and
the problem.
distribution is still pending, but I'm sure they are considering it, because we already made representation on that line to the right people.
Yes, sir.
So hopefully those things will get clarified over a period. But that's where we stand.
Understood.
And therefore, today everybody is rushing. Let me set up a foundation. But you should have done that before 24 to get actually a benefit in 24 for that.
Yes.
Okay, you're not late. You'll not get for 24. But if you set up now and get into the structure and apply, and if you get exemption, say, for next year, then from that time onward, you will get that benefit.
Yes.
So I will still encourage people to look at it in cases where it's applicable, and where possible, because of the 2-layer being available for...
That's a significant move.
It's a significant move. It is not there in any other jurisdiction.
Yes.
It's very beneficial, and you can actually use to plan certain flows coming as investment return there and get that 0% benefit. To what extent FTA will agree, approve, and all that, time will tell. But yes, it's a beautiful vehicle, at least for tax optimization.
I would say
of course, creditor protection.
I would say you have actually done so many applications, sir, till now in the market right now. I think if all your concerns or all your suggestions are taken up, I think this will become like a paradise. The people will start, coming in, and a lot of HNIs.
Even
all
with
the problems will be
9%
solved.
tax,
It's a
and
beautiful
with all
thing.
of this, people are coming in. They don't mind paying 9%. It doesn't pinch them anyway. You don't have estate duty, you don't have inheritance tax, you don't have wealth tax, you don't have all the other nonsenses which are there in every other country. And to pay 9% on income to get this lifestyle and to get this safety and security,
This is the best
they have
possible.
no problem.
That's it. How do you see the HNI category from India trying to shift their residential status and planning their retirements here?
Look, it doesn't work that way.
Yes, sir. So I want.
There are a lot of things at play.
Yes, sir.
We have been advising families for now over a decade.
Yes,
when
sir.
we started with advising families on the structures, and we continue to do that. But it's not easy for anybody to relocate just for tax reasons.
Understood. Yeah.
There has to be more compelling things around to do, and then only you will relocate. Yeah, tax reason you had some temporary issue, you will come for 3 years and then again you will go back.
Yeah.
You know, if your actual business, your day-to-day operations are somewhere where you are required, you will not be able to move. You will create structures to give you some benefit somewhere, but it's not that easy. Relocation and all, yes, when there are ultra HNIs who are not active in day-to-day business, they have set processes where professionals are already taking care of it and they are only overseeing, they can be anywhere. And therefore, they choose the best location for them to live.
And 3 hours from here.
So, whether it is Indian, whether it is a lot of UK people who are coming because of the reasons of UK, a lot of US people are coming, all of that is added. But for that, it's not just tax, it's the entire package.
Yeah.
Your safety and security, your latest infrastructure, your other availability of cost of living, facilities of multiple things are at play to make it more attractive. So those are at play and that's why UAE is attractive, therefore a lot of people are coming. But tax is an enabling part of it, but not the only driver, I would say.
I think you will make a very good ambassador.
It's not ambassador, it's just, I'm just stating
Perfectly
facts.
you are like for the attracting people here. So I think wonderful orator. See, the other part.
बोलते ही सीख गया हूँ, बाकी कुछ नहीं.
वही हम लोग तो नर्सरी में हैं अभी, so you have
ऐसा कुछ नहीं है.
Sir, from CT return filing status and the deadline stress that is coming up, from audit closures that are being bombarded, how do you see, is there any scope for extension or whether it is going to be...
Well, we all will be guessing, if I say honestly,
Yeah.
okay, that there will be extension or whatever. But we have to make an effort to be within the time and file within the time.
Do the right
UAE
thing.
is not known traditionally for giving extensions just for no reason. If they feel actually that yes, there is an impact, they'll definitely step in and do it. But at the same time, if I be honest, if I just see the number of clients in the return that I still have to file for next 2 months, if I can complete all of that, it'll be a miracle.
Sir, आप ही ऐसा बोले, डर लग रहा है.
And believe me, that quantum that I handle is still not the huge one.
I know.
And a lot of other people have
yeah,
very huge quantum
yeah.
at their end. And therefore, people are not ready. Financials are not getting done in the correct way. They are not factoring the tax impact all the time. So then you have to go back again, get it corrected and get it done. Some people are just not ready to correct. They have not done transfer pricing and they have signed financials.
I know, sir.
Okay. Now, if there is adjustment, are you going to put it up as a voluntary adjustment on your own?
Yeah.
No, I don't know. Now, these are questions which are not easy to answer. Okay. And therefore, people will make an attempt. They'll run and they'll try and put everything, all the effort possible. But I would be surprised that everybody can
Make it.
Let's hope for the best.
Sir, on the last part, is there any automation that you're looking at in terms of the overall, filing process? And maybe, I know we are working on it a lot, but how exciting is this journey and when is it going to be live? And
so we are soon going to come up with a solution. We have worked on it very heavily together, of course. The whole idea is that, like I kept saying, that government is going to adopt technology.
Yeah.
Now they are opening up for VAT software which are listed to be given an API access. Therefore, you can directly file the VAT return from your software. That's getting operationalized hopefully this year. If that is the case, I would see that within next year or two, they'll give the same ability for corporate tax return as well.
Yeah.
Do we have a tool which is available for that? No. Do we have a comprehensive tool which takes care of all the nuances which are there on the MRI tax portal while filing tax return? No. And that's why we are working on a tool which will come up, which we will bring it to people, where it will become easier for you to assess your data, input your data in there, so that the tool will generate the computation, applying all the conditions which are there in the CT, recording that as a basis of preparation, collating all the documents that you have used to prepare that at one place, and keeping a record of what you filed, so that you are audit ready from day one.
Yes.
That's the whole effort that we are doing, and we'll come up with that tool very soon for everybody.
Perfect, sir. Thank you so much, sir. It's been an honor sitting across. And we've been talking for since 90 minutes, I think, and we've not even stopped one bit.
That's the best part,
That's the best part. And the sync at which we went, I think everybody will see it tomorrow.
No, that's fine.
Thank you so much, sir.
It was
Thank
so much fun to have this discussion.
Thank you. Thank you so much.
Mithilesh.
Thank you so much, sir.
Yeah.
Thank
Thank
you
you.
everyone for this. Thanks. Yeah.